West Red Lake Gold. So we are focused on the Madsen mine. And the Madsen mine is not too far away from the mine that you were hearing about not too long ago. And as Sean mentioned, it is truly, it is a similar story, but several years ahead of where he is right now. So we bought this mine 2 years ago, and we've spent the last 2 years pushing really hard to take what was a failed mine and turn it into a success in time for this gold bull market. And it's fantastic that the gold price has been playing along really perfectly, because the gold market has moved really extensively just as we are right now on the edge of turning this mine on. So that's the first key point. We're right on the edge of gold production. That's starting up within weeks. The mine is therefore, of course, built and permitted. We have a mine plan that shows strong free cash flow from restarting this mine, even before considering, fairly clear upside that layers on top of that pre-feasibility mine plan. And then this slide says bulk sample underway. Well, that's because I had to submit these slides for translation quite a few days ago. It turns out we put out the results of that bulk sample just this morning. So we did deliver exactly what the bulk sample was supposed to do. I'll talk about that a little bit more. The success in the bulk sample just validates that our approach to this mine is indeed unlocking the value of this asset in time for the gold bull market. And we're right around the corner from production. We accessed the capital that we needed to get there. And so that's where we are today. I like to start here because everyone wants to know what's happening right now. And so the first quarter of the year was about completing the bulk sample, restarting the mill that had not operated for over a year and a half, processing that bulk sample, and finishing some of the really important infrastructure projects that we were doing to make sure that the mine worked efficiently when we restarted it. So we did those things on time in the first quarter. Now we're into the second quarter, of course, and we just today reported the results of that bulk sample, the reconciliation, which is to say the matchup between what we expected to get out of the ground and what we did get was really perfect. And so we reported those results today, really important milestone. And we've continued to mine after pulling that bulk sample out of the ground. We're building up the stockpile to sit beside the mill, and we are on the edge of turning that mill on to start consistently producing gold. And then all through the second half of the year, our goal is fairly simple. It is to ramp this mine up, starting at about 600 tons per day and moving towards 800 tons per day. I got a little ahead of myself there. Importantly, we have the money to do that. We raised capital. We had a debt facility. We raised capital. And now, of course, we are also going to be selling gold. We produced it in the bulk sample, and we are going to start selling gold very soon. This is where we're located. The Red Lake Gold District is on the western edge of Ontario, kind of right in the middle of Canada. Famous gold district, 30 million ounces of gold produced in the last 100 years. And the Madsen mine has been part of that. It produced in the 40s, 50s, and 60s, 2 million ounces of gold from high-grade rock. There were a few attempts in the ensuing decades to get it going again. The one that matters is the one that happened from 2015 to 2022. That's when the last operator, a company called Pure Gold, did a lot of really good work. They did a lot of drilling. They defined the resource. They permitted. They built. They did a lot of underground development. They built the mill, and they put it back into production. Unfortunately, they cut some corners in the latter part of doing that, and the corners that they cut really came back to get them, and their mine went bankrupt after only 14 months of commercial operation. Their loss and the loss for their shareholders, which was a devastating story, became an opportunity. West Red Lake stepped in and bought the asset in early 2023. And so we've been pushing this thing. We've been pushing to address the mistakes and get this mine on the footing that it needs to be on for successful operation for the last 2 years. This is just a look at the deposit from the side. It's a plunging ore body, and it's very high grade. The average grade of the resource here is 7.4 grams per ton gold. So that's a nice, rich ore body. And it, it's a consistent, it's got sort of those three lenses you can see: south, Maine, and North Austin. And there's lots of potential to continue this thing at depth. This is just the deposit as it's defined right now. Okay, so this is a mine that failed only 2 years ago. 2.5 years ago. What are we doing that's going to make it work this time? Well, it starts really with making sure that we mine the right rocks. I said that prior operator did a lot of very good work, and they did, but they didn't do enough drilling to have a sufficiently accurate resource model. And so it's actually similar to the story that Sean was telling just before me here. I mentioned that in Red Lake, there's been 30 million ounces of gold mined in the last 100 years. And so there is ways of mining the gold in Red Lake. Yes, it's narrow, it's high grade, it's not super continuous, but you can mine it successfully if you follow, call it the rules of thumb. And the rule of thumb is make sure you drill it tightly. So you drill it so much that the holes are only, on average, about 7 meters apart from each other. That level of information lets you build an accurate resource model, and with an accurate resource model, you can mine the right rocks. So that's been a big part of the work that we've been doing. We have done 90,000 meters of definition drilling. So that's drilling into the known deposit to create that level of data so that we can mine the right rocks. Then we just make sure that we mine plan proactively so that we are making good decisions about how to develop where underground so that we're set up for success. And then I mentioned the other thing that we were working on in the first quarter of this year was wrapping up, finishing some of the capital projects, some of the infrastructure projects that we had underway. And that touches on the other thing that went wrong for the last company that was at the Madsen mine. And so they didn't do enough drilling to know where the rocks, where the mineralization was accurately enough. And they tried to build the mine on as small a budget as they could. And the problem with the problems that created sort of reverberated all the way through the operation. For example, there were things that they could have built, arguably should have built, that would have made the mine efficient, but they decided not to do those because they didn't want to spend the money at the beginning. And so they had an inefficient operation. There's also things that quite often would have been bought, so would have been capital laid out as you build the mine, but they didn't want to spend the capital at the beginning, so they pushed those, they leased everything that they could possibly lease instead of buying, and so that increased their operating costs. It's pushed it from initial capital into operating capital. And so when you have an inefficient mine with lots of costs pushed onto it, that means that they had a very high cost operation. If you want to mine successfully, you have to know where the gold is and mine it effectively, and then you have to move and process that rock efficiently. Those are the two fundamental tenets of mining. And so they unfortunately failed on both of those fronts, but our definition drilling approach, we just demonstrated with the results of our perfectly matched bulk sample that by drilling it to 7-meter centers, we know where the gold is and we can mine it effectively. And then we did quite a series of capital projects to make sure that the mine is set up to move and process the rock efficiently. That includes a 1.4 kilometer underground tunnel that we call our connection drift so that we can move rock efficiently from the mine over to the mill. We proactively did a tailings dam lift. We bought a permanent primary crusher that didn't exist before. We built a camp so that we can attract good workers. We built a mine dry. These are all things that are setting us up for efficient operations. We are now ready to go. The fact that we put out this bulk sample this morning underlines that. The bulk sample, like I say, what we expected to get from the model that our definition drilling created and what we actually got out of the ground lined up perfectly. That was real reinforcement to us that our workflow makes sense. And now the other part that matters is the mine ready to run? And so we've been really working to set ourselves up operationally to be ready. So you got to make sure that your crews are getting going as efficiently as they need to underground. That's this development meters per day. How many new meters of underground work, of underground advancement can you do each day? Do you have a safe operation? You want to have a very low total reportable injury frequency. We did that very successfully in 2024. Safety culture is really important to us. We're ready there. We restarted the mill. We worked through the kinks that existed when you restart a mill that's been shut down for 18 months. We're building up that stockpile. So we've hired 200 people on site. So we do feel that operationally we are ready to rock. At the beginning of the year, we put out our official mine plan. It's a pre-feasibility study. There's good value evident in this mine plan, an almost $500 million NPV from a high-grade mine that generates almost $100 million in free cash flow from producing close to 70,000 ounces per year. What I think is really important to point out about the pre-feasibility study is that it was a pretty conservative look at what the Madsen mine can be. It used some very conservative assumptions about the gold price when it was deciding what parts of the resource would make it into the mine plan. And that conservative gold price that they used meant that it created a mine plan that focused only on the very highest grade gold. As it turns out, when you use a stronger gold price, we're using something like $2,200 as a gold price in our engineering, our mine engineering, you pull in some of the lower grade mineralization. And that's good because the lower grade tons also make money when they're right beside high grade tons. And the fact that they also make money and they're right beside high grade tons means that you can mine it all at lower cost because you're doing bigger mining areas and you can produce more ounces. You can just take more of the resource and basically maximize your economic benefit from the mine. So the bottom line is the pre-feasibility study underlines or lays out a successful, like financially profitable mine plan. And we think we're going to be able to better that because we don't exist in a weak gold market. We exist in a pretty strong gold market. And so we're able to pull more out of Madsen. This is a slightly complicated slide. It really just speaks to what I was just describing, which is if you use a really conservative gold price, like $1,680, you end up with the small blue bar on the left. Those are the tons that make it into your mine plan. If you use a higher gold price when deciding what parts of the resource make sense to mine, you end up being able to consider a lot more tons of your resource. So this is just highlights how significantly the tons that you might mine increases as you consider that we're in a much stronger gold market than our mine plan initially contemplated. Okay, we have other deposits. The Fork deposit, which is on the right here, that's literally right beside the Madsen mine. You can see the workings only 250 meters away. This is a high-grade zone that we recognized is in the middle of a lower grade deposit that others hadn't really thought about a lot before. We are working to we expect to do some definition drilling over here and hopefully pull this into the mine plan in the near term. That layers on top of the mine plan as it stands. And then the other thing is that we have this other project called Rowan. It's only 30 kilometers away as the crow flies, about 80 kilometers when you take the road around the end of the lake. And Rowan has a really lovely resource that averages almost 13 grams per ton. Remember, Madsen 7.5. This one averages almost 13 grams per ton. So we're looking at how it would work to mine that as a satellite mine and bring that lovely mineralization over to Madsen to add on to what we're doing at the Madsen mine. So these are things that could layer into the mine plan as we go, and not in the distant future. pretty soon.
Gwen, hello. Yeah. Just saying that you can wrap up a little bit because we still have Q&A. Yeah.
Absolutely. So I've already talked about these numbers. The reason that I put this slide up is it's really rare. There's hardly any companies putting new gold mines into production in this gold market. We are one of them. And usually when a new gold mine goes into production, a company earns a re-rate, and we have not yet enjoyed that re-rate because we're just on the cusp of it. And so there's various ways of looking at where that re-rate could potentially take the share price or the value of the company. And these are some of the ways of looking at that. And we are a team that has done this before. So I'll stop there, and I'm happy to take any questions that we might have.
Yeah, perfect, Gwen. Yeah, the first question is that what can possibly go wrong when you begin gold production soon? I guess operation wise,
Yeah, I mean,
maybe. Yeah.
yeah, it's an interesting question for sure. So what could go wrong? I mean, I would say that our biggest challenge in the coming months is just
Mhm.
making sure that I'd put it in two baskets. One is making sure that we are increasing the pace of everything that we're doing underground. So the bulk sample, mining that bulk sample was a really good learning process. We increased the pace of what we were doing underground. We made sure that we were doing it accurately and safely. And we just need to keep doing that because in order to pull the tonnage from the ground, we need to keep ramping that up. So that's a really critical item for us. And then the other is what's needed at every mine, which is paying attention to all the details. Because if you can tweak this detail and that detail and that detail and make this one 15% more efficient and that one 8% more efficient and this one 12% more efficient, that really adds up in how much money you make when you're mining. So those are the two things that I think are taking our focus right now, making sure we increase the pace underground and making sure we take care of all of the details.
Makes sense. Next question is that what financial plan are there recently? How's the company going to allocate the existing funds?
So, I mean, the funds that we've accessed at this point are all what we would call ramp up funds. So like right at this exact moment, we are essentially operating an underground mine, but not yet producing gold from that. We did produce gold from the bulk sample, and so that was over the period essentially of April. We did produce gold, but now as we focus on building up the stockpiles, we're an operating mine that's not yet producing. That is why we are so keen to get this thing back into production, to turn the mill on. That will likely happen in only a few weeks. And so the capital that we've accessed is to carry the company through this last critical phase, which is where you've got a lot of cost because you're running a mine and you're not yet quite producing gold. We're right near the end of that really critical phase, and we're right about to get into consistent gold production.
Great, great explanation. So, last question is that any debt payments you have to worry about in the next 3 years?
In the next 3 years, yeah. So no debt repayment in 2025. Once we get into 2026, then we do start to make payments on the two debts that we have. Excuse me. One of them is a 35 million US debt facility with Nabari. We have actually not yet drawn 12.5 million of that, but that's the overall number for that debt facility. And so we repay 50% of that principal over about I think it's a 20-month period, and then there's a bullet payment for the other 50% of principal at the end. So that is one debt repayment that starts at the beginning of 2026. And then the other one is that we did issue a set of gold-linked notes. And so those are 20 million US principal that we issued about a year ago, just over a year ago. And the repayments of those start in a modest way in 2026, with the majority of the payments in 2027 and 2028.
Thank you, Gwen, for addressing all the questions. I believe lots of investors are looking forward to the Madsen reopening and the company next
Oh,
step.
we are looking forward to the Madsen reopening. We are so excited. So thanks so
Great,
much
thank you. Thank you
for the
very
questions
much.
and the
Thank
interest.
you.